Welcome. I'm Catherine Magana here with Steve Wolf, Rachel Ivanovich, and today we have a special guest with us, Glenn Domingo from Farmers Insurance. And today we're going to have a discussion on the markets, a little bit of planning, and then we're going to focus on property and casualty insurance. We thought we'd mix it up a little bit today. But before we dig into that, let's give you an update of where we're at with the markets. And today is May 15th, so as of yesterday's close, which was Wednesday, May 14th, the Dow Jones for the year was down 1.16%. It's actually up, though, from last week, over 2%. The NASDAQ year-to-date was down 0.85%. We saw the biggest move there. That index, it was actually up over 7% since last week. And the S&P 500 is actually up year-to-date. Believe it or not, it's actually up 0.19%, and we saw a move of about 4.45% from last week. So the tone has shifted a little bit. It's been tariffs and what's happening, and now it seems like there's a focus on taxes. So it's interesting to see. I know. It's been interesting to see the markets. It's been quite the ride this year, and once again, we're already in the middle of May, and it's just been an interesting year. The Fed, looks like the projections for the Fed for June, if there's going to be a rate cut, and obviously we still have a couple more weeks to go, but it looks like there's a really dim chance of a rate cut. It's the projections are below 9%, and then the July odds is about 37%. So it doesn't look like we'll see any rate cuts coming anytime soon, but we'll see what happens.
That's interesting because the inflation rate, I guess it was a CPI, is only at about 2.3%. So, right, 2.3?
It is, yes, yeah. And it was down from last month.
And so, at least for now, it looks like inflation is under control. There are a lot of people who believe because of the tariffs that will rise a bit. But I'm wondering how that will affect Powell with the rate cuts. So we'll see what happens there.
As you're talking about the inflation, it was saying that basically some of the cost of food has cooled off a little bit. And I know we talked about eggs a couple months ago, or in the last couple months. It looks like the cost of eggs was down. So it was $6.23 in March, and in April was $5.12. So basically, it's not where it was a year ago. I guess a year ago it was at $2.86, but it looks like the price of eggs have gone down. So let's go ahead and make some eggs again. Just kidding.
But didn't it get up to like $12 or something?
It was expensive, at least probably here in California.
So do you think any of those breakfast places are going to lower their prices again?
No, but they started increasing. Did you see that? It was like an extra 75 cents
or a dollar per egg.
I know, it's like, oh, man. But interesting. But we'll keep an eye on that. And obviously, those types of price increases and changes does affect budgeting and when you're planning your expenses.
And by the way, we're talking about the markets. We had a pretty good week, I guess, over the last 6-7 days anyway of the market. And the Fear and Greed Index, the CNN Fear and Greed Index, is now up to 70. And I find this to be just fascinating. I believe it was in March, we were up to like extreme greed.
Extreme fear? In March?
Extreme greed.
Oh, okay.
Once April 2nd happened, we fell all the way to almost zero. I mean, which is almost unheard of. It was down to was at 4, I think it was. Okay. And that was just about a month ago. Now we're back to in the greed category at 70. So the mental state of the market, I guess, has just changed dramatically from being up to being down to now being up again. Interesting.
Well, like I said, it's been quite the ride this year. So let's talk a little bit about with our special guest, Glenn Domingo. So thanks for joining us today.
Thank you for having me.
You're welcome. So we kind of want to talk a little bit about insurance. I know you're here in California. We do have clients all over the U.S. We do have a lot here locally, but we do have clients out of state. And one of the things that came up for us here in California recently was we had the fires up in L.A., and so when that happened, it kind of triggered some kind of conversations or ideas of, am I set up properly, or what should I do? And obviously in other states, there's other types of disasters or events that happen. But one of the things I was hoping you can kind of comment on was, if you do have a trust, should you have the title? Should you have your property titled in the name of the trust, or is that something is it done automatically, or should you ask, or what's the importance of that?
Yeah. Again, having the home in the trust for passing it on to generations is probably the key. But you do need to name it as an additional insured on your insurance policy. The reason why is, how is the home titled? And that's how the check will be made out. If your home is not properly titled on the declaration page, there'll be a delay. It'll take time, but the quicker you get your money to repair your house, the sooner. And that was a lot of service work that we've been doing at the office was, hey, my house is in a trust. Do I need to name it? Yes, you should. Just name it properly. Yeah.
And so then what about the coverages and the dwelling cost? I mean, obviously things change, and how often should you be looking at that? And
Us as consumers, we're kind of ignorant when it comes to updating our home insurance. We just leave things as is. We don't like to do reviews. But as you can see, inflation has really increased the cost of services, the cost of materials. And for instance, we were going to try to put an ADU at our home, and that was pre-COVID. It was about $200 to $250 a square foot. After COVID came and all inflation came, it came to $400 to replace the home. Wow. So we have an anomaly in California. Our replacement value is not the appraised value. For instance, a home in Bakersfield that's $500,000 to replace. It'll cost about the same to replace on the coast of Newport, but that value of that home is $750,000, while the value of the home in Newport Beach might be $1.5 million. So to do an assessment, it's very important for our clients to just call in. We forget at times, hey, did we added solar? Did we tell that to our insurance guy? We did a couple of home improvements. Did we did that properly? Inform our insurance agent. So again, your points on the wildfires and having the right amount of coverage, it's always important to do your annual review.
Well, it's interesting. Also, we had an earthquake here a couple of weeks ago, and I was like, oh, I know I have earthquake insurance, but that was something that I had it's extra. It's not part of our original policy, but I'm sure after, you don't think about it until you have something that happens and you realize.
And the phone started ringing again. We wait, but again, there's a moratorium. If you're in that area, that was in the Julian area, they'll not issue any policies until the earth has settled per se, but these things trigger, and we don't want to be so reactive to our insurance needs, but doing again an annual review with your agent is very important.
Earthquake insurance is not cheap either.
No, it's not.
Some areas are inexpensive, but like back in Northridge or where the real quakes happened, it's astronomical. And that's kind of an interesting point to segue into is how come California is in this crisis with insurance. And I give it to Prop 103, where we're not allowed to rate based on area. We're very reactive in that we want a disaster to happen before we charge correctly. And so the home builders have to realize that they have to include that insurance factor when they're building these homes.
What do you mean by that?
Well, we were home builders were able to really build and get incentives to build, but the infrastructure wasn't there. They don't have preventative fire breaks, proper fire breaks. And so insurance companies were not allowed to rate according to how high that risk was. They'll have to wait till a fire blows through before they come and increase rates. So that's what we're working on right now. And again, to properly have the correct rate for the area in which you are. And now how it comes back full circle is the home buyers, the new home buyers, are waiting for the last 30 days before they get the insurance, and all of a sudden they can't find it. or it blows their ratios out so they can't even do the deal. A couple of incidences where our client said, well, where's the insurance? And we're waiting for the California Fair Plan to give us a rate. This is for the last resort of insurance. And it puts their ratios out where they can't afford the home because of the insurance.
There are certain insurance companies now that have gone out of the state of California.
Yes, sir.
Why do you think that happened?
The cost of doing, they weren't allowed to get rate. That's why State Farm was allowed to get in a 17% emergency rate where you file.
That was just recently, right?
Yes, that was just recently. And so when these companies aren't allowed to take rate, they become very, very cautious about being insolvent. And so, the point that I don't like, Steve, is that they're able to still collect premium, but they're not writing new homeowners. So they put added pressure on the people that are AAA, Mercury, Farmers. So we're increasing our rates, but we're sometimes the only option for clients. And so it's just there has to be some legislation changed, especially for our fixed income seniors.
So basically, it's bad government policy, is what you're telling me.
In a roundabout way, there has to be change. We have to look for the consumer. We have to, not the insurance company. We have to act in the right interest of the consumer. Then everything falls into place if you do that.
So there's been rumors here in California that potentially there is going to be a fine or some type of assessment to help cover some of the fires. And so do you see that's common, or is that something you see in other states, or are you familiar, or just what do you expect?
It's interesting. When we had the 2018 and 2019 wildfires here in Carlsbad, we didn't get rate for 2 years. We had to analyze how much we actually spent out. 2 billion, whatever it might be. This won't trickle down until another year and a half, 2 years. These wildfires in the Palisades, we won't see that. But as you recall from the earthquake, was it 92 or 93, the Northridge earthquake? We also saw an assessment, and it was just a little line item on your insurance bill, but an assessment. And we will see that. So keep an eye out on your bills to see.
Interesting.
So I know we talked a little bit about the cost, and for us, when we do kind of our financial planning and projections, we're looking at kind of income, what's coming in, what's going out, what are the expenses. And it seems like the cost of auto, property, I mean, all those types of insurances have gone up. I don't know if that's something, once again, there's a reason here for California, but is that something that we should expect ongoing? And then, also kind of maybe let's talk a little bit about umbrella insurance.
Auto insurance follows, kind of the repair. How much is it going to cost to repair? And as you recall, during the pandemic, we had a ton of boats just with supplies, and we couldn't get things fixed. And it is an indicator of how inflation works. We should see stabilization because we've taken rate. Most of the companies have taken rate. But again, we're not going to see this inflation, the increase from the Palisades wildfire until it's completely assessed. On the home insurance side, we will, again, a year and a half, 2 years from now, we'll start seeing the tick. We've slowed down on the rate increases, and companies have pulled out or don't want to do business in California. But some of the larger players that are negotiating with the Department of Insurance are promising, hey, we'll get back into the market. We'll bring stabilization. But California is a whole different anomaly. It's like Texas or Florida, those type of insurance rates.
So let's talk a little bit about umbrella policies and kind of what that is and the importance, or if you don't have it, or if you do have it, why you should consider it.
Okay. Well, the umbrella policy, again, is excess liability. It encompasses your underlying limits of coverage. And if we do get into an accident, now the minimum coverages used to be 15, 30, and 5. They have increased it to 30,000, 60,000. And I believe it's 10,000. And those limits are, again, your bodily injury, the bodily injury for the total accident and property damage. Any car with a rear camera now and you tap it, it's going to cost sometimes more than it is to just total out the car. But the umbrella policy is, again, excess liability in the event that you get into an accident and you exceed your limits. You are personally liability and can have your wages garnished if you are at fault. So the umbrella policy is a good overall encompassing and not too expensive. It is still dimes on the dollar. I used to say pennies on the dollar, now it's dimes on the dollar. For coverage
It's more like dimes on the half dollar.
Yeah, there we go. More so. So it is, especially with financial planning, we grow people's assets, or your company grows people's assets, and it can be wiped out with one car accident. So it's really peace of mind. That's what insurance is for, peace of mind. But it encompasses your home and also your auto insurances and maybe recreational vehicles. So it's always good to review for that.
Is there anything else in the insurance world that we should be thinking about or want to share with our listeners today?
Well, one last bit of information is that water, not fire, has seemed to be the most outpay in insurance for the past 10 years. Who thought of putting copper plumbing in a slab? With that kind of design, I don't know. They've changed it. All those copper pipes, and we have to break into the slab and the burst pipe. Anyways, a lot of
It's so clever.
a lot of insurance companies are giving discounts now for a whole house water detection system that it shuts off.
Oh, interesting. Okay.
It goes to your smartphone, and if it leaks, it detects a leak. It'll let you know. If there's a sudden and accidental burst, it'll shut the system off before
Wow. I was thinking
the
that's
water-
going to save a lot of money because how about all the flooring and walls and kitchen
Yes.
remodels
Mold
and
remediation.
And that's how you can increase your deductible. People are coming up with $10,000 deductibles. Oh no, I want that $500 deductible.
Yeah.
Well, how many times have you had an accident? Oh, I've never had an accident. Increase your deductible, put the safety measures, and that will help manage your premiums in the future. So that's a nice feature to have. And again, most companies are heavily discounting if you do have that.
Interesting.
Yeah.
Well, thank you for your insights. What's a good way for us to reach you or contact you?
Well, you could always Google me, Glenn Domingo. But my toll-free number is 866-486-FARM and FARM. And being in the business for 28 years, the type of people that we do business with now are referrals from my referral partners. So it's very easy to find me. I really appreciate the time and the cadness that you guys have in this podcast. And
You mean we're not charging him?
yes, I really appreciate your
Right.
time.
All right, so now let's focus a little bit on taxes, Rachel's favorite subject. So there's been a lot of headlines over the last 24 hours about taxes, so I thought I'd let Rachel kick off and share.
So if anybody needs any bedtime reading, there is a draft bill out there that's 389 pages.
Which you would think that it's already in place the way that
the way the
headlines-
media is reporting about it, you would think there actually is already a signed bill, but there.
Is that reading for insomniacs?
That's what I was talking about.
Oh, okay.
So yes, for me, I would just read it just for fun. But I think it's really important for people to understand that just because they're reporting, like these are some of the proposed changes. It's not law yet, and so. Yesterday, May 14th, the House Ways and Means Committee voted to advance the tax bill to the House Budget Committee. And from there, it still has a lot of steps to go through before it actually makes it to the president's desk and he actually signs off on it. So instead of going into what the proposed changes are, we figured we would just kind of give you a quick, the House votes on the bill, and then once the House votes on the bill, then it goes to the Senate. Once the Senate passes its own version of this bill, then the House and the Senate basically reconcile their differences. And then once they vote on that, then it actually goes to the Congress sends it to the president to sign. So we still have a little ways to go before we actually will have tax bill. They're hoping July 4th we should have something. And I think, one of the big things that they're really unable to agree on is that SALT, the state and local tax cap, which has been capped at $10,000 since 2017. They're saying $30,000, but I believe that there are several senators in California and New Jersey, New York that are just saying, we don't agree with that. So
They want it higher.
absolutely, yes.
You
Because
want to explain just quickly what the SALT tax is?
so with your taxes, you either take a standard deduction, which I know they're proposing increasing the standard deduction again, or you itemize your deductions. And itemizing means you make a list of mortgage interest, the taxes you pay, any charitable donations are kind of the three big ones. But the state and local itemized deduction, previously you could deduct all of the state tax that you paid, which in the state of California, the higher tax states, it's substantial. And so putting a $10,000 cap on that really increased a lot of taxpayers' bills every year. So it's the state tax, and that's also property taxes and vehicle licensing fees, which in the state of California, it's not cheap to register your car anymore, so it's a big deduction. And so putting that $10,000 cap on there, it takes away a lot of our deductions.
Yeah, but I think that was done intentionally because the rest of the country was saying they're subsidizing California. Is that right?
I didn't hear that, but okay.
But no, that's what
I
they
agree
were
with
saying.
you. I can't agree with you on that, yes.
Because taxes are so high here, that the rest of the country is saying, well, that's your issue. Why are we paying for your taxes?
Sunshine tax.
Right.
Yeah, but it is the one big beautiful bill is what they're calling it. I love the title. I'm not even going to jump into what the proposed provisions are because it's actually not even law yet,
Yeah.
and tax code is already complicated enough without it.
I thought we'd share just maybe one or two that might come out that might be of
Okay,
interest to our clients.
all right.
So maybe
Go
like
ahead.
the
Go ahead,
65
Catherine.
and older. So it looks like if you're 65 or older, they're looking at a $4,000 credit, and then the income levels, the modified adjusted gross income, if you're single, is $75,000, and if you're married, $150,000. So that's
So wait, the 65 and over, you get a credit whether you paid taxes or not?
No, I believe it's an unrefundable credit, meaning it would only offset tax. It wouldn't act
Okay.
as a payment.
Okay.
Yeah. So,
Darn it.
so kind of looking back to what the Trump campaign promises were is no taxes on tips, no taxes on overtime, and no taxes on Social Security. And so one of the proposals is give a deduction for qualified tip income and overtime pay potentially, but the Social Security bit was left off. So instead of that, that's, I believe, what this proposal is to give seniors a $4,000 credit, a reduction, dollar for dollar reduction of tax. If you're over.
See, that's a nice. I mean, that it goes through. That's a pretty big.
It's pretty big, yeah.
But that's still not no tax on Social
correct.
Security.
And there is an income limitation that they're proposing.
And then the other one that kind of stood out for our small business owners was they're looking at potentially the pass-through business tax deduction from 20% to 23%.
The qualified business income deduction. Yeah, that's a great one for business owners, and they are talking about bumping that. The other thing that I think might be exciting is the fact that they're proposing a larger estate and gift tax exemption. So it is set at the end of this year to be reduced down to about between $5 and $7 million, but they're proposing to increase that to $15 million and have it be made permanent and indexed for inflation. So.
And then it looks like there's slight changes to the standard deduction rates. But, once again, we'll report as we get a little more finalized with the numbers. But there's definitely some exciting
things to think
coming.
about.
Yes.
Yeah, of course, it's got to be approved by both sides of the aisle.
That is
Yes,
And
that is.
and therein lies the rub.
We'll see what happens.
Yeah. All right. Well, thank you, Glenn, for being here
Yeah, thank
this
you,
week.
Glenn.
Thank you.
Interesting
I enjoyed
discussion.
it.
And, of course, thank you, Catherine and Rachel, for your weekly knowledge and wisdom. I think that's about it for this week. We will see you next week, and we'll find out if the market will continue its rally.
All right.
Thank
See you later.
Thank you.
Bye-bye.
Thank you.
Please stay tuned for important disclosures. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional. WWM Financial is a registered investment advisor with the SEC.